sense of whether or not we are going to get clarity for the business community?
The tariffs could go up as time goes by, and they may go up. And, you know, I don't know if it's predictability. I think
so that's not clarity.
No, I think that they say that. You know, it sounds good to say. But for years, the globalists, the big globalists, have been ripping off the United States. They've been taking money away from the United States.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America.
And that was the soundbite that set off a global sell-off in stocks. President Trump talking with me about tariffs on Sunday morning futures. His 25% tariffs on steel and aluminum taking effect overnight. They are in effect right now. The European Union has responded with retaliatory tariffs on $28 billion worth of U.S. exports beginning April 1. President Trump's tariffs, reciprocal tariffs, are expected on April 2nd. Stocks are red across the board so far this year as markets react to the uncertainty around tariffs and the threat of tariffs. The president told top CEOs yesterday at the Business Roundtable that tariffs will go higher, reiterating what he told me on Sunday.
The tariffs are having a tremendously positive impact. They will have, and they are having. We have car companies that are not building in Mexico now. They're building in the United States. They take away our jobs. They close up places in Michigan and all over the country, and they'd build them in Mexico. In many cases, they were owned by China. There is a good spirit. There's a renewed spirit. They don't want to pay 25% or whatever it may be. It may go up higher. The higher it goes, the more likely it is they're going to build. And ultimately, the biggest win is not the tariff. The biggest win is if they move into our country and produce jobs. But the tariffs are going to be throwing off a lot of money to this country. And we've been ripped off for years by other countries, many, many decades.
Joining me now in a Fox Business exclusive is the CEO of Goldman Sachs, David Solomon. David, it's great to see you. Thanks so much for joining me this morning.
It's good to see you, Maria. Thank you very much for having me from Washington. Of
course. And you were at the Business Roundtable yesterday. Several major banks revising their economic forecast in the midst of this tariff uncertainty, including Goldman Sachs economists, by the way. What can you tell us in terms of your reaction and the impact of tariffs on the economy and your business?
Well, I was at the Business Roundtable yesterday, and I'd start, Maria, by just observing that one of the things that I do like is that the president is engaged with the business community. Yeah. The administration is engaged with the business community. And that's a different experience than what we've had over the course of the last 4 years. I'd also observe, his sense of optimism in the engagement yesterday at the BRT. I think the business community understands what the president is trying to do with tariffs. Now, the business community is always going to want lower tariffs everywhere in the world. At the moment, there's some uncertainty. The market's digesting that, but we're going to have to watch and see how this all plays out.
Yeah, and you've got other things within the president's agenda that occurs to me to be very positive for your company, Goldman Sachs, as well as corporate America in general. I'm talking about the deregulation. Cutting regulations is a huge thing, and that's going to have a big impact, the extension of the tax cuts. So I want to get your sense on the macro story right now, David, because initially President Trump did not want to make a prediction. You heard him in that soundbite when I spoke with him on Sunday. That caused this massive sell-off in stocks. Yesterday, he did say, I don't see a recession coming. How would you assess the backdrop in terms of animal spirits? Do you see M&A and IPOs picking up for you at Goldman? Are things that used to be on the shelf now coming off the shelf, if you will?
There's no question that activity levels are slightly better than they've been over the course of the last 24 months. But there's still an enormous amount of pent-up demand, Maria, both for capital markets activity and M&A activity. I would say at this moment, the level of uncertainty is a little bit higher, and that has kept some things on the sideline, some possible transactions on the sideline. But the overall level of dialogue as people are thinking strategically about where they want to drive their businesses is certainly increasing. I agree with you. There's potential, especially if we got more specific actions on the regulatory front to unleash more animal spirits. I think that's something we'd all like to see. And my expectation is, you will see as you get through the year a pickup in activity across both the capital markets and M&A.
I mean, you've had alternative investments as a key focus area at Goldman, and I want to get your take about the investment climate right now. I understand that there's some uncertainty around these tariffs, but do you think investors are looking longer term right now to try to look beyond this period of what President Trump would call a disruption, temporary?
Well, there are lots of things going on in the economy that are super interesting, Maria, and certainly can create enormous headwinds for growth. I think what's going on with AI technology and the continued growth in compute is an area that's particularly interesting. There's an awful lot of innovation in the economy broadly, and when you talk about private capital and private capital investors, they are stewarding capital for long periods of time. They look out over cycles. They pick great companies that can grow regardless of environment. They obviously have to deal with the macro environment in the short term, but I think there continues to be an incredibly attractive set of opportunities to invest and grow and steward capital.
Yeah, and that's why I want to check in on that business, because you've got the recurring fee revenue and asset wealth management, and that's real important. And I know that you've been building that business along with the bread and butter of capital markets business at Goldman.
Well, the firm has, as you point out, the firm has two significant businesses. Our global banking and markets franchise, which is a leading franchise. It's what the firm has always been known for. It's the business that serves our clients broadly around the world. And in addition, we have an asset and wealth management platform that we've been very focused on growing. We've communicated to the market that we expect to be able to grow the durable revenue in that business, the management fees in that business, high single digit. We've been doing better than that. We supervise over $3 trillion of assets, close to $3.2 trillion of assets in that business. And we have a very unique global platform that spans the full range of asset management activities, whether it's from liquidity all the way through to a very, very broad alternatives platform. So we're excited about that business. We've got great client partnerships in that business, and it really is an engine that can allow the firm to continue to grow and serve our clients.
Yeah, and you've got a great vantage point to tell us how the activity looks. I'm going to get to small business in a moment because I know you're doing lots there. But if you were to look out to 2025, going into 2026, do you